Good evening, everyone. This is Joe Henches with Beyond the Chart, and this is Thursday, February 27th, 2014. And this is the technical analysis of the stock market today. And the title of my post is Jitters? What Jitters? So the market had the Ukraine turmoil to deal with. It had higher unemployment claims, higher than expected unemployment claims. And it had, what else? Interest rate risk spreads are spiking in China. So we need to keep an eye on China because that's the wild card that could really mess us up. So we've talked about that. We've had several blogs about that, and it's definitely getting in the press. So we've got to keep one eye on China. All right, the market was up 70-some points today, 74 points. The Dow Industrials were. The Dow is pushing higher, starting to push up through this resistance in here. About the only thing I can say is that this, if you look at this this activity, it's all above this 10-day exponential moving average, this blue line. Okay, so once it pulls above it and it stays there, it just rides it. It just rides it out. You know, okay, you're going to have some down days. You know, it's going to be up and down. Nothing that goes up every day. And but right now it's continuing to push, and I'm not seeing a sign on the short term anyway that this has any indication of stopping. I mean, you're going to need to see this thing roll over. The DI plus is greater than DI minus. Not really getting any strong divergence. Demand index is up. RSI is rising. So that it's not showing, because in the S&P 500 it closed above 1850. Now, I have got to measure, and that was one of the things I talked about yesterday, or yesterday or the day before. Now, that's not to say this thing can't roll over at any moment. I mean, as we all know, the market's going to do what the market's going to do, and you just have to, you know, we're trying to assess and read the tea leaves as best as we can here. And if all of a sudden the market starts to roll over, we've got to react. Okay, and we've got to, you know, have our stops in place and all that good stuff. So one of the things, when I've got these numbers in here, what I've done is I've looked at, on the S&P 500, I looked at what looks like these last 5 waves in a 5th wave. Okay, so we got 1, 2, a 3rd wave here, which had 5 waves in it, and then this 4th corrective wave, and then now what looks like we're in a 5th wave. And when I do my projections based on this activity, there's some various formulas that we can use. There's 3 potential stopping points. 38.2% was one, and we're already there. We're pushing up through there. The 50% is the next one, and that's at like 18. Let me get the number here. So if we continue to push, the next target to me is like 1882. And the next target after that is like 1916. Okay, so we're just going to have to continue to watch. Those are my next threshold markers, and of course, to get up in that, you're probably going to get outside the Keltner channel. So we'll just have to see if the market actually continues to push up in here. The Nasdaq is definitely pushing, and it's in the upper end of this channel that we talked about. And it was up 26.8 points today. So you can look at this channel, and you know, it's a beautiful channel, and but right now it's been hugging the upper end of the channel, and we'll just have to see how much more, or whether or not it even pops out to the upside. New York Composite, this one again, as I think we talked about, is more similar to the S&P 500 in terms of its activity. By the way, the S&P 500 I think was a new all-time high, and this one wasn't higher than this close. And you know, I'm not sure that it matters a whole heck of a lot in terms of, you know, okay, well, this close is higher than that close. It's like, okay, this Russell 2000 is doing just, you know, just like the Nasdaq. Let's take a look at the short-term trading index. Had a decently bullish reading in here, you know, low rating, 0.79. We've got the 10-day exponential is at 1.08. So still not down below 1, and still not getting as low as it was when we had some of these previous tops, previous turning points. The VIX continues to cluster in here. Okay, we haven't broken lower yet. New highs, well, actually, that's not what I'm looking for. The new highs was 147. I've got a chart, because of the way I've got to do the calculation with the chart, this is what I'm looking for. High-low, okay. We were a net of 129. So again, we're kind of clustering in here. I had a this moving average. Remember, it slightly broke it and then it's pulled back down. It's hovering right in here in the middle, not really getting a strong signal one way or the other on the net new highs, new lows. And then I wanted to take a look at these ETFs just for grins to see how they were looking. Let's take a look at the semiconductors first. Semiconductors have pushed higher in here, and they've continued to now they're kind of going sideways the last 5 days. So a little bit of consolidation going on there. The real interesting one is the home builders, S&P home builders. We look at the last 2 days on this. We've got a real pop out to new highs here. And so that really surprised me when I saw this tonight, because I didn't look at this last night. And, we'd had some noise about, mortgage applications dropping off, 13-year lows, and investor participation dropping off. I read some articles about that. But yet, here we've got the home building index pushing to new highs. So that's what we got to continue to watch. And then the financial ETFs just going sideways also. This hasn't pushed up here. So up here is where the home builders and the semiconductors have gone and gone beyond. And here down here is the financials. So we're going to have to continue to watch this to see if this is a drag, because if this doesn't participate, that's a warning sign. All right, let's take a look at the 3 stocks that were the big losers. The 3 biggest losers of the 33 option trading stocks I follow. Valero is one. We got stopped out this morning almost first thing. Actually, this close was theoretically the sell signal I was talking about, but it was so tight and so close in here. I said, okay, you got to prove it to me. Take out this low, yesterday's low, and it did first thing this morning. And it's a good thing we had that stop, because it then continues to just plunge, and you just never know. That's the thing, and that's why you have a stop. So I really thought this was working beautifully. I thought it was going to continue to push, and I thought we at least hit our target. We came very close. We got within like 80 cents, which is frustrating to get with 80 cents of your initial target and then have it turn on you. But that's what happens. Let's see. The next one that I'm looking for is SINA. There it is. And then I want to hit Green Mountain. Okay, this is one that again collapsed after earnings. And now we've had a little bit of a pause up and then continued selling today. It popped up first thing this morning, then it sold off. Not really sure. I think we're still in corrective mode here, and there could be something more complex going on. So we're just going to have to watch to see, do we get back up above the 10-day exponential moving averages start to push, or whether the 10 breaks down below the 21 and this thing rolls over. Green Mountain. This one has pulled back last 3 or 4 or 5 days. It had a heck of a spike up, and the DI plus got very high, and that typically will spell the end of the move or the coming end of the move. But because we've got some nice lined up, they get the 233-day moving average, the 55, the 21, the 10's up here. I would be looking for a setup to try to go long on this again. That would be what I'm looking for. With this kind of strength and everything that's in here right now, I wouldn't be looking to sell this. That's just my thinking. So we'll have to keep an eye on Green Mountain Coffee Roasters and see what happens. All right, tomorrow is Friday, last trading day of the month. I hope everyone has a great Friday, and we'll talk to you this weekend. Thanks for stopping by. This has been Joe for Beyond the Chart.